In this video, we're going to talk about how we can use price action rules to help us navigate the market and identify high probability setups as price action traders. We're going to be reading bar by bar price action, and we're going to come to a conclusion what we are supposed to do as traders to identify what is the right structure. So right now I can see that we have decent uptrend working higher. We moved so far from this bearish push down, we had overshoot, that right now I'm focusing only on this uptrend. This is the most recent structure, and as a price action trader, I need to identify a new channel so I understand what is the directional bias of the market. During the correction, break, push to a new extreme, and market played out with the break, push to a new low in the form of a two-legged pullback. This is important. This is typical how market moves in pairs of twos. And because I have two-legged pullback down, if we're going to push above EMA now, this is a good sign that this uptrend needs new high according to trend line rules. I'm just going to zoom in closely and let's see what's going to happen. Okay, we're pushing above EMA, which is a good sign for the buyers. They want to see the new high. And now we actually have high-low confirmation set up. But the problem here is that the high-low has a terrible signal bar. And signal bar is the last piece of confirmation of the setup, because we cannot really go long above full bearish bar like this. You can consider double bar entry, but you can see the double bar entry is quite big. So if you're going to use double bar entry, you must wait for break above this bar and drop your limit order lower somewhere around this area. Stop loss, of course, has to go one tick below the signal bar, below the initial bar, but you have to use limit order deep one if you're going to use double bar entry, because you want to have enough room before reaching these highs. You don't want to go long at the very top. If you're going to use double bar entry, you can consider high-low confirmation setup, two legs down, downtrend played out, and you need new high. And market keeps working higher, keeps working higher. We have a break in new high, so you can mark new high temporarily. But what you can see is the market keeps working higher, even though we have a break in new high. Okay, let's see what's going to happen. A new high again can reset, and once again we have two-legged pullback, one leg down, break, second leg down, and market continues to go higher again, even after new high. So right now, when I'm working with the price action, I'm getting all the information I need, and the information is telling me that the buyers are not done and we evolved into a stronger trend, which means if there's a stronger trend, I need to look for a different channel, okay? Because we're breaking new high, push up, push up, push up, there is uptrend continuation. So I'm going to take a look at the beginning of the structure. Initially, I drew channel something like this, which is good channel to consider, but it's a little bit too broad, a little bit too big for this recent price action. If I'm going to start a little bit later, I can find a little bit better channel. You don't have to be perfect, you just have to be close, and you're going to look for confirmations, all right? So this is what we do as price action traders. We identify the structure, we look for channels, and we wait for high probability setup at the key entry point. So let's see what's going to happen. Can I get something at the key entry point right now? New high can reset, and I want to look for something like this, the two-legged pullback, second entry long. Okay, I'm going to redraw the downtrend working lower, and we have the first attempt only, new high, break above this bar high, the first attempt only. We're not interested in first attempt because you can see leg down, first attempt failed, leg down, first attempt failed. Is the second attempt, that is the high probability attempt, if it forms at the key entry point. And here we have it, new high, first attempt to go long, pull back, second attempt to go long. So we have second entry long. We have the same issue as we had right here. Once again, you cannot go long above the bear bar, you have to use the double bar entry. Once again, stop loss goes below the initial signal bar, wait for trigger above this bar, and drop the limit order somewhere around here where the initial entry would have been. And if you play like this, you have confluence of two key entry points, EMA and the trend line, and more key entry points you have, the better. Sometimes you can get even third key entry point, and that would be some triple test, something like this. We don't have this in this example, but the more key entry points you have, the better, and therefore this is a stronger setup. Or simply, if you have better bar, you can definitely go long here. Second entry long, two attempts, two key entry points. And you can tell market cannot create the second full leg down like this one, because we have key entry points here, and this is where the new push phase will start. So you're not looking for the deep second leg. The attempt is enough because you are exactly key entry points, and market is going to continue working hard because this is the bigger pattern, and in price action, bigger pattern takes precedence. And market keeps working higher, keeps working higher. And you can tell what a great trade this was. You can just manage the runner. I was holding the runner, and you can just trail the stop loss below each significant swing. But what I'm going to do, I'm going to extend the trend line, something like this. Copy it at the top. So very nice trade, nice runner. We have tiny overshoot, but it's super tiny. It's very borderline. When I was watching this live, if I'm going to get a textbook second entry long at the EMA, I'm not going to consider this overshoot because this overshoot is so tiny. Let's see what's gonna happen. You have a second entry long below EMA, so of course you cannot go long here. And the bullish bar didn't get a trigger, so you can't even use double bar entry, so nothing. We have double trap, but I don't really like using double bar entry and double trap that much. See what's gonna happen. Can I get high low? Now we have high low confirmation setup off the trend line. This is a tempting setup. Problem is, notice how flat the EMA is. We've been going sideways for quite a while now. You can definitely make a case for some consolidation, especially potential overshoot. Fortunately for me, I was actually holding the runner, so I didn't take it. But if I wasn't holding the runner, I would take a chance because it's a high low, small risk, only 2 points. You know, big trend is the main pattern. There's a chance it's gonna go higher. Trading is about taking a risk. Not the bad high low, but you can tell that we're going sideways. It looks like it's going to a little bit roll over. So there are some clues to be a little bit more patient, especially after potential overshoot. But decent stuff to consider. This would have ended up being a losing trade. No problem. Right now what I'm going to do is I'm just going to wait because I still expect new high to be tested. Zoom out and understand the big bias. Big bias is still very bullish. I'm not even going to be thinking about selling because when the trend is up, we're only thinking about buying. So now my job is only letting the correction play out, which happened now, breaking new low. And I'm looking for high probability setup to go long. I want to see push above EMA. This is the sign of bullish resumption that the buyers are about to test the new high. Because if you're going to buy below EMA like this, you simply don't know how long the correction is going to be. Okay, sometimes you can go long below EMA if you have, for example, some triple test here or perfect measure move. But when it's a little bit choppier, you want to wait for the push above EMA, something like this. You have high low here, but it's an inside bar. Also, you got EMA in the middle, new low, first entry short. I don't really like it. It's an inside bar. I prefer to get some failed second entry short. Can I get a failed second entry short? No failed second entry short, and that's a shame because you'll break any extremes. So unfortunately, you can't really go long here. Maybe you have some better bar, better setup, because tick charts, they can vary a little bit here and there. But on this chart, inside bar, we broke below EMA. Not the greatest high low, although the context is clear. You just expect new high, and perfect price action, you have a break. Push to new high. So for now, I'm going to pause, looking to go long, and let's see what is the next market cycle. And we keep working higher, and we keep working higher strongly like this. And look at the momentum. You have to ask yourself, is this market acting like buyers are done? It's not. Because after breaking new high here, why market keeps going higher so strongly? Why their pullbacks are so tiny? You can't even correct to the EMA. This was the sign that the market is still too bullish, and if the EMA is going to hold, I can consider buying at the EMA because the trend is simply so strong. If I'm going to take a look back, I can connect the first two swings, something like this, and I can see that the bigger pattern is right now coming in play. Or what I can do with more price action, I eventually cut the corner early here because I'm getting the bounce here, bounce here. This is what I like, a lot of confirmations. You can also use higher time frame 10,000 tick chart. This will give you an idea what is the best trend line. But right now, let's see how the EMA is going to react because EMA is important. We're going sideways. I mark the congestion. We have a new high, first entry long, pullback, second entry long. So this right here is not only second entry long, but this is also failed breakout out of the trend range. This is a small trend range. You broke lower. Most breakouts will fail, especially if you combine it with the direction of the main trend and you are at the key entry point. And because we had very strong push up even after new high, we concluded that the trend is strong and the buyers are in the market. We can go long. I can mark it even like this. If this was simple, plain second entry long, not so easy to go long, but if you're going to combine with the failed breakout, you have extra reason to go long, you can consider. I actually arrived from my break around this point and I saw this high low and I actually dropped the limit order on this high low, and now it's even stronger setup. It's a confirmation of the second entry long. I managed to get this high low and great new push face scalp was made. See what's going to happen, and market keeps working higher. Okay, I'm going to redraw the correction once again. Respect these correction channels. You're not worried about wider correction channel like this because you are combining it with the failed breakout. Okay, when you're fading the breakout from these small congestions, sometimes it can be only first entry or you can have the correction channel. So this is why once you have the failed breakout out of the congestion, you can go long on the second entry long. Downtrend break push to a new extreme. Okay, downtrend played out. You maybe can consider going long on a second entry long. Problem is, it's not easy to have the best fitting trend line at the time, you would have to cut the corner a lot, and you're barely touching this. I think it's a bit too aggressive due to the ambiguity of the channel. Sometimes you can find a good channel, but here you have to really cut the corner here, make it tight. Smaller risk, maybe you can go long. Also, these two legs are not as broad. I really think you need to get that push above EMA and a high low confirmation setup. I have a high low here, but it's super far from the EMA as a doji, so I cannot go long here. Can I get a failed second entry short? Well, I can, but once again, failed second entry short is not full at the EMA. Not full at the EMA. Now the trend was very, very strong, yes. But you're just not full at the EMA. Maybe more aggressive trader can consider because the context is so clear. But we prefer to have the setup closer to the EMA. It worked regardless. And can I get some last second entry long at the EMA? New high first entry long, nothing. Gonna redraw the correction. New high first entry long. And now it's getting way too late, market is about to close. Alright, so this is the overall structure for today. Very nice and strong uptrend day. Very simple trading. You're not thinking about selling at all. This high low was the only tricky setup that may have confused you, but other than that, it was pretty much smooth sailing. You just have to wait for the correction phase to end and buy at the key entry point. One decent setup here, another one here, two great setups here. Potentially this failed second entry short. It's a shame there was no better setup here because this is the precise point where you can catch major runner. Correction phase is ending, you expect new high. This is the right place to enter and look at the massive move it generated. Unfortunately, on my chart, there wasn't such a great setup. But this is what we do as price action traders. This is how we use price action rules. I'm gonna wrap it up. I hope the video was helpful, educational. If you find it helpful, like the video, subscribe to the channel, and I'm gonna talk to you next time. Good luck with your trading.